I'm very bullish on Bitcoin and Ethereum. To me, they are the core assets of the entire digital asset ecosystem. These are foundational in a way that other cryptocurrencies aren't. I see most other crypto projects as venture bets. Solana, however, stands out as the one that's moving closer to becoming a core asset in this space. From a traditional macro perspective, the environment is very supportive for Bitcoin and Ethereum. But when you look beyond these core assets, the level of usage and interaction with blockchains has really exploded in the last 6 months. Part of that growth can be attributed to the launch of Bitcoin and Ethereum ECFs, which have brought new participants into the ecosystem. Another big factor has been Coinbase's L2 solution base, which has onboarded many users into decentralized finance. We're also seeing emerging trends like decentralized physical infrastructure networks and real-world assets, which, although small, are gaining momentum. On top of that, the stablecoin business has been incredibly strong, playing a crucial role in expanding the use cases for digital assets. Overall, the ecosystem is maturing, and the future looks promising.
I'm extremely bullish on Bitcoin and Ethereum. These two stand out as the core assets of the digital asset ecosystem. They're foundational, serving as the backbone for everything else happening in the space. While other cryptocurrencies are more like venture projects, Solana is emerging as one that could also become a core asset over time. From a macroeconomic perspective, the environment is very supportive of these core assets, particularly Bitcoin and Ethereum. But beyond just these two, what's really exciting is how the usage and interaction with blockchains have exploded over the last 6 months. We have seen this due to a combination of factors, including the launch of Bitcoin and Ethereum ETFs, which have brought new people into the ecosystem, and the growth of Coinbase's L2 base, which has helped onboard users into decentralized finance. We're also seeing the rise of decentralized physical infrastructure networks and real-world assets. Although these sectors are still relatively small, they're gaining momentum. The stablecoin market has also been incredibly strong, serving as a bridge between traditional finance and the crypto ecosystem. Altogether, the digital asset space is maturing rapidly, and we're witnessing a broadening of use cases that go beyond just speculation, driving deeper integration and adoption. The future looks incredibly promising for both the core assets and the emerging technologies within the space.
Subscribe our channel and press the bell button to get our video notification. And like the video.
Bitcoin has massively outperformed gold over any reasonable long-term time period. As a long-term investor managing 10-year life funds, the short-term fluctuations in Bitcoin's price, whether it's at $16,000 or $70,000, don't change my view. To me, Bitcoin is essentially at an all-time high. The difference between a 10 to 15% price swing doesn't matter much in the bigger picture. Over the next 6 months, I expect Bitcoin to exceed $100,000 and Ethereum to reach around $5,000. We're on the cusp of a significant bull run. Gold might be ahead of Bitcoin at certain times and behind at others, but Bitcoin, being a more emerging asset compared to gold's 5,000-year history, moves with more volatility and offers greater upside potential. Both assets are reflections of global liquidity trends, and when liquidity is plentiful, as markets are beginning to anticipate, these assets move fast. Bitcoin, with its higher volatility and upside, is a different beast compared to gold, but both will benefit from the same macro forces. As liquidity increases, I believe we'll see strong performances from both Bitcoin and Ethereum as they continue to act as leading assets in this new digital age.
Bitcoin has greatly outperformed gold over any reasonable long-term period. For a long-term investor like myself, managing funds with a 10-year horizon, the short-term fluctuations in Bitcoin's price are relatively insignificant. Whether Bitcoin is priced at $16,000 or $70,000, it's still close to its all-time highs in my view. The key focus should be on the broader trend. Looking ahead, I anticipate Bitcoin will exceed $100,000 within the next 6 months, with Ethereum potentially reaching around $5,000. I believe a major bull market is on the horizon. Gold can sometimes lead or lag in the market, but Bitcoin, as a newer and emerging asset compared to gold's 5,000-year history, tends to experience more rapid price movements. This volatility can translate into greater upside potential. Both Bitcoin and Ethereum reflect global liquidity trends. As liquidity increases, these assets are likely to rise significantly. Bitcoin, in particular, is well positioned to benefit from these liquidity trends, given its relatively recent emergence as a digital asset and store of value. Its growth potential is substantial, especially when compared to gold, which has a more stable but slower-moving market. As global liquidity becomes more abundant, we can expect these assets to respond dynamically, making Bitcoin a compelling opportunity in the current financial landscape.
Investing in crypto isn't just about throwing money into some obscure low-cap coin and hoping for a massive return. Like betting on Dogecoin, I approach the sector differently. While crypto isn't fully mature, it's a significant space with $3.5 trillion in value, $2.5 trillion in cryptocurrencies, and another $1 trillion in businesses related to digital assets. Understanding the macro environment is crucial at this stage.
China, as the world's second largest economy, plays a key role. While not everyone has access to Bloomberg, it's possible to track economic indicators. For instance, China's money supply has been weak, consumer spending is soft, and real estate prices have dropped significantly.
Their stock market, especially in Hong Kong, has struggled with prices essentially flat over the past 20 years. Imagine if the Nasdaq in the US had been stagnant for 2 decades, it would create a significant uproar. The weakness in China has exerted deflationary pressure globally, which has in turn helped moderate inflation in the US. It's essential to keep an eye on these global economic trends as they significantly impact the digital asset ecosystem.
Investing in crypto isn't about impulsively putting money into obscure, low market cap coins with the hope of a 1,000-fold return, like betting on Dogecoin. Instead, I view this sector through a more measured lens. The digital asset ecosystem is far from immature. It represents a substantial value of $3.5 trillion. This includes $2.5 trillion in cryptocurrencies and an additional $1 trillion in related businesses. At this stage, understanding the macroeconomic environment is vital. For instance, China's economic status has considerable implications. Despite not everyone having access to Bloomberg, you can still track key economic indicators. Recently, China's money supply has been weak, consumer spending has been sluggish, and real estate prices have significantly declined. Their stock market, particularly in Hong Kong, has faced long-term stagnation, with prices remaining nearly unchanged over the past 20 years. If the Nasdaq in the US were at the same level as it was 2 decades ago, it would cause a major stir. This weakness in China has exerted deflationary pressure on the global economy, which has helped moderate inflation in the US. Keeping a close watch on these global economic trends is essential, as they profoundly affect the digital asset space.
Subscribe our channel and press the bell button to get our video notification. And like the video.